day. Welcome to the PSG Wealth Local Solutions Performance Overview for April 2022. The South African stock market fell for only the third time in the past 18 months, with the FTSE JSE All Share losing almost 4% month on month in April. That's as risk appetite soared globally. There were a few places to hide in the local bourse, like Thungela, which continued to benefit from surging global energy prices, with the stock up 48% month on month and around 222% higher year to date. Sasol, the other local beneficiary of higher energy prices, was up 11% month on month. Miners have been a key driver of strong local market performance, but were generally weaker in April as production reports disappointed slightly. Banks and insurers, both losing 7% month on month, were amongst the weakest performers. Naspers and Prosus, up 3% month on month, also benefited from weaker currency and an 11% rally in Tencent. Local cash came in fairly flat and local bonds losing 1.67% for the month. Local property also retreated by 1.41% month on month for the month of April. Global equities yielded losses in rand terms for the month of April, down 0.43%, while global bonds and property both yielding positive rand returns for the month. Over the longer investment horizon, local equities have yielded 7% return, and given current market events, local property continues to underperform. Comparatively, offshore equities delivering better results relative to domestic counterparts, that being in rand terms. Despite short-term pressure, our solutions continue to show both perseverance and consistent results over longer investment horizons. This is reflected in them being ranked in either the top or the second quartile over long-term investment horizons and since inception, and over the minimum recommended periods. Jumping into the local fund of funds performance, Enhanced Interest Fund outperformed the sector by 68 basis points over the minimum investment horizon of 1 year. The Income Fund, now leading the sector, averaged by 40 basis points over the recommended investment horizon of 2 years. Pleasing to see the deficit previously experienced has been made up. The Preserver also leads the sector, averaged by 27 basis points over the 3-year period, and is also ranked in the first or second quartile over all measurement periods, and the fund is ranked 7th since inception. The Moderate Fund of Fund outperformed the sector by 57 basis points over the 5-year period. The fund is also ranked in the top 2 quartiles over all relevant measurement periods longer than 6 months. Over the recommended investment period of 5 years, the Creator Fund of Fund also outperformed the sector by 2.19%, while also outperforming over the 7 years by 2.23%. Looking at some of the highlights of the funds, 4 out of the 30 local underlying managers are on the quantitative radar screen, that being Coronation Balance Defensive, Coronation Balance Plus, Coronation Equity, 91 Equity. Regarding underperforming underlying funds, the short-term underperformance is attributable to stock-specific detractors, as well as a tough current economic climate. All managers go through periods of underperformance when their investment style goes out of favor over the short-term periods. Finally, some of our strong performers for the month include the Nedgroup Invest Core Income, Momentum Income Plus, 91 Cautious Managed, 91 Opportunity, and 361 BCI Equity Fund. Thank you.